Now, coming to companies which went public, which basically rang the bell, has been a blockbuster month. There were total 5 IPOs of companies that were PE VC backed. Of these 5 companies, 2 IPOs where market cap at listing was in the vicinity of about $7 billion. Of course, as a result of which OFS or the liquidity component is going to be heavy. I would come to that. 2 companies were in the vicinity of $3 billion and one company was about $500 million. So I would say a very strong month in terms of the liquidity generated as well. So the first company here is Capillary Technologies. This is a company into AI-driven customer loyalty and other SaaS solutions, providing this solutions to customers sitting across 30 odd countries. This is a company which has been very successful at acquiring other companies. I think about 50 odd % of their revenues come from the assets that they acquired. They IPO'd in November on 21st. They were founded in 2012. So the IPO journey from foundation is about a 13-year-old journey. Here the issue size was 878 crores, out of which the fresh issue is about 345 odd crores. And if you remember from the DRHP days, the aim of fresh issue was about 450 odd crores, which was dialed down a bit from DRHP to prospectus. So that 450 became about 345 or so. The selling shareholders are Capillary Technologies PTE, which sold about 500 odd crores. And then Avatar Ventures sold about 50 odd crores. Their performance FY25, they did about 600 odd crores. On which the EBITDA margin was about 13% and a PAT of about 13 odd crores. The market cap that they were able to achieve was about 4,500 crores at listing. So price to sales of about 7.6 and EBITDA multiple of about 58 odd. So that's Capillary. The next large company which went IPO is a company called Groww. A lot of you would have used the Groww app for trading. Interestingly, they didn't start as a stock trading or broking platform. They started as a direct mutual fund platform. Like you might know that you can buy a mutual fund online, either in a regular format or direct format. In good old days, direct was only available on the mutual fund websites or somebody like CAMS or KFIN. But a broker always used to sell a regular platform, because of which you had to pay additional expense or so. So if you look at the returns of a regular mutual fund, it is generally a little bit lower than a direct mutual fund because extra costs are included in a regular program. So without getting into that, then customers started requesting for a stock trading platform. Essentially, the consumer demand pulled them to launch other asset classes as well. So this Groww, I would say, fits in the wealth theme because of the capital or wealth that is being created in the country. There are various platforms or needs of various customers that need to be served. Even in our portfolio, we have a bunch of wealth tech companies like Small Case, Multiple, Power Up Money, to name few. Groww went IPO on the 12th of November. They started in 2018, so a short 7-year journey versus an average of 20 odd years. The total issue size was about 6,600 crores, of which the fresh issue was only 1,060 odd crores. The remaining 5,500 odd crores was primarily OFS, within which Peak 15 took about 1,500 odd crores. Ribbit took about 1,180 crores. Y Combinator took about 1055 crores, and there were a bunch of them. Interestingly, like Kaufman Fellows Fund, which is a fellowship program, I think they also, the fellows from there have a program or a fund that had also invested in Groww. They also took some liquidity in this. Their performance, they did about 3,900 odd crores in FY25, on which their EBITDA margin was 65 odd %. Now this is a pure tech platform, as a result of which your margin structures are very good. So 65 odd % of EBITDA, and on that EBITDA, PAT of about 1,800 odd crores. So even if you look at the listing market cap of about 62,000 crores, which is in the vicinity of 7 billion, what I said, this is EBITDA multiple of about 24 times and earnings multiple of about 34 odd times. Interestingly enough, at the end of the week, the stock went up to 1 lakh crore plus, and then it did correct a bit. I'm not sure where it is trading right now, but truly a spectacular listing, I would say, and a company built and went to IPO just in 7 years. Now the next company is Wallah, which went IPO even a shorter period of time. They went IPO in just 5 years from the time they were founded. So to recap, Wallah is an omni-channel education platform. The categories that they focus are K-12, upskilling, test prep, and so on. And their offline centers, which are called Pathshala centers, is an integral part of their strategy. So as I said, just 5 years, founded in 2020, went IPO in 2025. The total issue size here was about 3,500 odd crores, of which fresh issue was 3,100 odd crores. Small OFS component about 380 odd crores, which was primarily taken by the two founders, Alakh and Prateek. And oh, by the way, this is a very rare company wherein founders at the time of IPO owned a big chunk. They owned 80% plus in this company. FY25, their performance was a revenue of about 3,000 odd crores and an EBITDA of about 225 odd crores. So price to sales of about 10 times. The third large company which went IPO in this month is Lenskart, which all of us know is an omni-channel eyewear company. When I say eyewear, like sunglasses, your lenses, etc., all are sub parts of it. Not do they only sell them, but they also are fully backwards integrated in terms of manufacturing, designing, etc. They were founded in 2008, so about a 17-year journey to go IPO. The total issue size was about 7,300 odd crores, of which fresh issue was about 2,200 odd crores. The selling shareholders here are SoftBank, which sold about 1,000 odd crores. Schroders sold about 770 odd crores. Temasek, Kedara, AlphaWave also sold somewhere in the range of 200 to 300 odd crores. And the founders, which is Piyush, Amit and Neha, again cumulatively sold about 1,000 odd crores. If you look at the performance, a very strong P&L, I would say. Revenues of about 6,600 odd crores, EBITDA margin of about 20 odd %, and a PAT of about 300 odd crores. So at a market cap at the time of listing, which was about 70,000 odd crores, they were priced at about 10 times to their sales. And the last company, which was again a large IPO, I would say, is a company called Pine Labs. Pine Labs is, if you know the payment stack, there are issuing side solutions, there are acquiring side solutions. So issuing side is basically the cards which banks issue. That's where the journey starts. That is the issuing side. And acquiring side is the POS that sits at the merchant side, where you swipe that card or scan a QR code or tap. That is the acquiring side. Pine Labs provides solutions on both sides, and not just for cards, but also for UPI, wallets, QR, etc. And their focus is India, Southeast Asia, UAE and Australia. The founder over here was not Amrish Rao, who is the CEO right now. Amrish earlier had founded a company called Citrus, which was bought by PayU, and then Amrish came to Pine Labs, wherein he is now the CEO per se. And this is a company which, if you go back to history, Pine Labs was as such founded in 1998. So a long 27-year odd journey. The total issue size was about 4,000 odd crores, 3,900 to be precise, of which about 2,100 odd crores was the fresh issue. In the 1,800 crores that was sold in OFS, Peak sold a significant chunk, which was about 508 crores. Actis sold about 195 crores. And then Temasek, PayPal, MasterCard all sold somewhere between 100 to 200 odd crores. Invesco and Madison also sold some small chunks. In terms of performance, FY25, they were about 2,300 odd crores, growing at about 29%, EBITDAs of about 12%. At a PAT level, they were still burning capital. Now, coming to the liquidities that were generated in the post-listing period. So, Ather Energy had two trades wherein existing investors sold their stake. So, first was Temasek sold stock worth about 1,200 odd crores, which was about 4.4%, and they reduced their ownership to about 1%. Then NIIF, the National Investment Infrastructure Fund, in Ather Energy sold stock worth about 1,080 odd crores, which was about 4% stake. And they have almost exited their position in Ether now. And finally, in Paytm, Elevation sold about 1,600 odd crores. They sold 2% stake and brought down their ownership to 13%. So overall, if you look at in this month, the liquidity generated was about 17,000 odd crores. So give or take, this is $2 billion. If you remember during the last episode, we had said that although in this month, which was in the month of October, we had only $500 million of liquidity generated for PEVC players, November is going to be a blockbuster month. And by no surprise, there is this liquidity of $2 billion. So when we do the next episode, which would be, of course, December, and then we would do a recap of entire FY25, sometime as the holiday season ends, we are sure that that would be $1 billion on an average liquidity generated in the entire year of 25 if we look on a monthly basis. Yeah, so that's what it is. Thank you. Look forward to see you in the next episode. Thanks.